Welcome back to the podcast. If you're planning to buy a home in the near future, one of the most important things you can do is improve your credit score before applying for a mortgage. Your credit score plays a major role in determining whether you qualify for a mortgage, how much you can borrow, and the interest rate you'll receive. Even a small improvement in your credit score can potentially save you thousands of dollars over the life of your loan. Today, we're going to cover 5 practical ways to improve your credit score before applying for a mortgage. Let's get started. The first way to improve your credit score is to pay all of your bills on time. Payment history is one of the biggest factors that affects your credit score. Lenders want to see that you're reliable and capable of managing your financial obligations. Late payments can remain on your credit report for years and may significantly lower your score. If you've struggled with missed payments in the past, start by setting up automatic payments or reminders. Even paying the minimum amount due is better than missing a payment altogether. Consistency is key. Every month that you make your payments on time helps build trust with future lenders. The second way to improve your credit score is to reduce your credit card balances. Many people don't realize that it's not just how much debt you have that matters, it's also how much of your available credit you're using. This is known as your credit utilization ratio. For example, if you have a credit card with a limit of $10,000 and you're carrying a balance of $8,000, you're using 80% of your available credit. That high utilization can negatively impact your credit score. A good rule of thumb is to keep your credit utilization below 30%. If possible, aim for even lower. Paying down credit card balances before applying for a mortgage can often result in a noticeable improvement in your score. Focus on reducing balances on cards that are close to their limit. This simple step can make a big difference in how lenders view your financial profile. The third way to improve your credit score is to avoid applying for new credit. When you're preparing to buy a home, it can be tempting to open a new credit card, finance furniture, or take out a personal loan. However, every time you apply for new credit, a hard inquiry may appear on your credit report. Too many inquiries within a short period can lower your score and may raise concerns from mortgage lenders. In addition, opening new accounts can increase your overall debt and change important factors in your credit profile. If you're planning to apply for a mortgage within the next few months, it's generally a good idea to avoid taking on new debt unless absolutely necessary. Keep your financial situation stable and predictable. The fourth way to improve your credit score is to review your credit report for errors. Mistakes happen more often than many people realize. Incorrect account information, inaccurate balances, duplicate accounts, or even fraudulent activity can appear on a credit report. Before applying for a mortgage, request a copy of your credit report and review it carefully. Look for accounts you don't recognize, incorrect payment histories, or outdated information. If you find an error, contact the credit bureau and the creditor involved to dispute the information. Correcting inaccuracies can improve your score and ensure lenders are evaluating you based on accurate information. This step doesn't cost much time, but it can have a significant impact on your mortgage application. The fifth and final way to improve your credit score is to maintain older credit accounts. The length of your credit history is another factor that influences your score. Lenders generally prefer to see a long and stable credit history. Because of this, closing old credit cards can sometimes hurt your score, especially if those accounts have been open for many years. Even if you don't use an older credit card frequently, keeping it open may help maintain the age of your credit profile and support a lower credit utilization ratio. Of course, every financial situation is different, but in many cases, keeping long-standing accounts open can be beneficial when preparing for a mortgage application. Now let's quickly recap the 5 ways to improve your credit score before applying for a mortgage. Number 1, pay all bills on time. Number 2, reduce your credit card balances. Number 3, avoid applying for new credit. Number 4, review your credit report for errors. And number 5, maintain older credit accounts whenever possible. Improving your credit score doesn't usually happen overnight, but taking these steps consistently can strengthen your financial profile and increase your chances of qualifying for a better mortgage. A stronger credit score can lead to better loan options, lower interest rates, and potentially save you a significant amount of money over time. Thank you for listening. If you found this information helpful, be sure to follow for more mortgage tips, home buying advice, and financial insights. We'll see you in the next episode.